All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for November 17th, 2021. Just finished my Wednesday night. I have a 4-hour doctoral course on educational leadership for universities and colleges, resource management, and strategic planning. I just finished that. So a few minutes late. Let's start as usual with the some gratitude and forgiveness for the trading that we've done and are about to do, and proposing to learn something about this. So today was an inside day, had a micro gap down, and then finished resting right on top of the dragon, a narrowing dragon. So we're still at the tail end of this really strong move that began 30 days ago in the winter and then became spring and then summer, pause, second leg up to a 10-day high about 7 days ago, 7 days ago. Has pulled back slightly into the fall and is paralleling with our little baby dragon here and resting right on the long-term fair value. That's the RL270 right here. And the dragon is now resting right on the edge of the river. And the Pcr is marching up nicely and still pointing the way ahead. We have a confluence of support here at 467, which is like the spine of the dragon, the edge of the river, the RL10. So everything just says, yeah, this is probably the best estimate of current value that you could come up with. So in fact, if you look at this, you have the RL10, the RL30 is the RL10 and the RL270, I should say, are both inside here and joined. You have the RL30, which is temporarily above, because remember, here's where the RL30 has moved. And then now here's the RL90, which is lagging a little bit. So if you were to look at this from the RLCO framework, what you would notice is that back here, where the RL90 and the RL30 crossed, that was the beginning of the next strongest move up on the next higher time frame. So that's like a RL 1030 crossover, only that's the 3090 crossover. So that actually makes this move that we've been experiencing for the last 15 days, that makes this a really strong move, because you had the 30 underperforming the 90, and now then it got better with the owl, and then it crossed right here, and that was a confirmation of improved performance. So now the 10 has pulled back to the 270 and has joined. So you have the traders and the long-term buy and holders both agree that this is the current fair value. You have the 30 is a little bit optimistic, and you have the 90 is improving and playing catch up. So this still is a favorable move to the long side, but I now interpret this as a critical state. Is it really going to continue with the next leg up and get higher than this all-time high right here? It's testing that right now. But if it fails out of there, then it comes back to the RL90, which is this, and comes back to the Bollinger Band mean, which is down here. So that's the critical state. The upside is going to continue to move along with the Hull moving average, or if it retraces, it's going to come back to the 10-day low, the RL90, the Bollinger Band mean. That's what the shape of this thing looks like. So as we interpret what's going on, that's what this looks like, is a perfect critical state at the end of a strong bull. And it's the, the second leg of the bull move up has now stabilized right here. So as we look at this, if we zoom in now to this little window, that's what we have right there, is that little inside day is perfectly postured to blast through that green line to the upside or break through that consolidation of support and then come down to the RL90 and the Bollinger Band mean. So that's what makes this a critical state on a like a swing trade basis. And I want you to notice how narrowly compressed this 10 period trading range is. The high was made here 9 days ago, and the low was made here 6 days ago, and that's only 1.87%. That's 10 days, and the entire width of that channel is only about 2 ATRs. So 2 weeks of sideways, trading data is compressed in the space of about 2 ATRs ish. And then today was a tight compression of the daily bar. So that to me feels like a breakout getting ready to happen in either one of those directions. That is perfectly postured for a short-term surprise volatile move. That would be the least surprising move of all. So when I'm thinking about how to frame that trade, when I bracket that trade, if you will, I'm thinking about, getting long at the high of the day. So somewhere around, whatever this 469.5, and then getting short on a breakdown of the low of the day, something like, 467.5 or 3/4 or something like that, and the yellow zone is simply inside that little range. So I will be using a hybrid frog right from the get-go and ready to trade SPY and then those indexes that are strongly correlated to the S&P, such as IWM or the Qs or any of the, like XLK or something like that. So that's my interpretation of the swing trade time frame. And when I see when I'm looking at price charts, on this market, those little frameworks that I just drew, those are things that I have, just trained myself to see, because that's the way I look at them. I mean, I see those things without even drawing them. And that comes from doing this for, every day for 30 years. That's like 260 trading days a year times 30 years is about 7,800 daily market reviews. So that's what happens when you look through the same lens. You see you just see things in that certain way. Let me know if you found that to be helpful. Yeah, the auto framer chart, definitely of interest. Okay, so let's look at the sectors now. So the S&P was right in the middle of performance, down 1/4, 0.25. The Qs were slightly better, up a fraction at 0.05. Treasuries were up 0.8, so now they're at 146.25. Emerging markets and diamonds about minus 0.54 and 57. And then the Russell was the big loser today at minus 1.31. All right, let's look at the symbols that were better than the S&P. Starting as usual with the sectors. So we have XLP is the consumer staples. Then you have lumber, Mexico, and then the other lumber, wood. You have lithium and consumer discretionary, and that's going to be based on strength in Home Depot and Amazon and Tesla. Then you have wheat and precious metals, agriculture 1.2, Bitcoin 1.23. Simon Property Group is our commercial real estate proxy. VXX 1.63. So that's people buying some portfolio insurance coming into that critical state. That's what that is. Then you have this triple-headed monster of crypto goodness in the form of let's see, that would be so you have the blended large cap crypto, you have the Bitcoin Trust, you have Ethereum up 3%, Tesla up 3.25%, Apple 1.65, making a strong recovery. Even Microsoft was better slightly than the S&P. Yeah, and Coinbase, the disruptor, is going to do well when crypto does well. I still think there's more room for recovery in those because of the sharpness of the sell-off the previous day. All right, underperformers. Tech was down 0.3. Materials 0.66. Blended commodities minus 0.9. The FANGs 0.9. Finance, blockchain, S&P biotech 1.25. Brazil energy, marijuana down 1.55. Clean energy, Arc Innovation, Moonshots, Arc Genomics, oil down 2.14. XOP is oil exploration. And then you have the individual losing positions. These are interesting. So it's interesting to me that on a day when crypto was good, PayPal was bad. So you're starting to see a little disconnect between their cash flow business and their crypto stake. Another big down day for the metals. US Steel 3%. TX, the steel company, 1.58. You have Robinhood 3.13, Squarespace, Devon Energy, John Deere, Virgin Galactic, Alcoa down 0.58. So weakness in the metals, making them very good for trading. So if I think I'm ready tomorrow to continue. First of all, I would continue with Mexico because he's a great frog champion anyway. But I'd be looking for these defensive, you're seeing some defensive plays in here. Treasuries, Wheaton, agriculture, Bitcoin, VXX, commercial real estate. There's some juice left in those. That was very strong defensive plays today. And not much that was better than the S&P. So that's the cautionary tale to the downside. Let me know in chat if that was helpful. Some very good crosstalk in the room today. Ben is working hard on his bar by bar worksheets and ironing out the details for himself on how to do, exit management on trades that get to 1R fairly quickly, and then the Pcr is lagging. That's a good problem to have. I hope you have that problem on every trade. And so he had an urge to move the stop to no lose plus dinner for 2. And he waited a couple bars and got it done. Peter asked me, should we be swinging or intraday trade? That's up to you. I mean, the swing trade is there to be had. You just got to put your risk boxes in place. If it frames out for a reasonable swing trade, then swing trade. This is a market that has legs in both directions. From a critical state, those day trade moves can become swing trade moves. It's just a question of does the trade frame support directional trading? It will. And your swing trades are wide enough to protect you against intraday volatility so that you're getting swing moves and staying out of the daily noise. This market can be swing traded. And that was the argument. When it's coming into a critical state, that means it can be swing traded in either direction. So I'm ready to go in either direction and follow price. For me, that will start with a day trade and then keep a piece as the swing trade, because I'd like to use markets money to fund the overnight risk. That's just how I standard do it. But you have to be there intraday to do that, or trade hourly charts or something like that. That's hybrid trading. But this is a market that supports swing trading. All right, let's look at so here's Bill with his Pcr Flip. I talked about the beauty of this thing yesterday with no idea about how beautiful it was going to be today, but it's certainly beautiful today. Makes you want to say, yeah. So this is on HNT, traded at Binance, right? So here's the Pcr Flip System. He got long on this when it flipped to the underside. He got long here with the stop here, and then he follows. All he does is follow the Pcr, so he gets his exit here, and that's minus 0.58. And so then the Pcr is up here, and then it flips here. So he buys it here with a risk box right there. And then he just follows the Pcr dots. Now, I might have said something like, hey, when you're outside the Z3 and this thing starts rolling over, like I might want to take the crossing of the dragon here instead of this and save that extra piece, because that is the same size as that. But I mean, that's really, from the highest high, that's 1R, 2R, 3R. This probably gave back 4R. But he netted 9. So this thing was at some point plus 13. Like, that also tells me on this move here, failure to fail. It didn't fail back to the Bollinger Band main. It broke out. I might have strongly considered a second position here. And on this move, this thing went from here plus 13 all the way back down to here that day. Like, I might have just said, you know what? I'm out here. Maybe I'm out right there intraday. Or maybe at the end of the day, oh, I'm out here. That's the same exit that you get over here without any of this crap. But this was 4R that was committed to following the rules of the Pcr. So to me, when you have abnormal gains, now I don't know exactly what Bill's definition of an abnormal gain is, but plus 13R is anybody's definition of abnormal. So if I'm holding plus 13, I might say I want to keep 90% of plus 13R. So 13 times 0.9 is 11.1. So that tells me I might need to have a 2R trailing stop. So from the peak, I might need to just say 1R, 2R, and I'm going to give back 2, and that would get you out here instead of here. And so instead of giving back 4, you give back 2. So on abnormal gains, you might do something like, hey, on a regular gain, I want to keep 2/3 of the gain. And then at plus 5, maybe I want to keep 3/4. And then anything greater than 10, I want to keep 90%. What that will do is let you keep a higher percentage of the great big moves, which is a big number. So just some thoughts that you'll see in the hybrid workshop. But that's 9, that's, I'm not sniffing at 9R. Where's my annotation? Oh, there it is. All right, here's DIA. So he's looking at kata 1. So this, for those of you keeping score at home, this would be a collapsing dragon right here because it's below the RL10 and it's clearly sloping down. This one is like new low of the day after collapsing dragon. If you were ever going to go short, one of those two is not bad because then you get this whole thing. But he's working on kata 1, so the SSC. So he sees it come down. It makes a turning point, crosses the baby dragon, enters the dragon, crosses the spine, leaves the dragon. And there's the Pcr, that declining Pcr. He goes ahead and takes that, picks up the wrist box here, grits his teeth. Now, if this got you to no lose plus dinner for 2 and you took that, then you see this, you're happy with this. And then here's a 1, 2, 3 reentry, or there is the Pcr reentry. And so you get right back in where you got out and you didn't experience that loss at all. So either way is fine. And then he takes about a 1, 2, 3 exit here. That's pretty nice. And he just decides to lock in gains. Love it. Maximum favorable excursion was 2.4. He kept 1.8. So he kept 3/4 of a 2.4R gain. That's pretty darn good. Pretty darn good. EWZ. Boy, I just love this collapsing dragon here. And a Z3 pinch breakdown too. You get all of that. This was a reasonable Pcr flip kata 1. Good exit. There's our collapsing dragon and a Z3 pinch breakdown. And I love that. Oh, so that's a CD. Yeah. When the SSC fails, that's why this is my number 2 favorite pattern. Because when it works, it's pretty good. And when it fails, it gets me to my number 1 pattern. And imagine, so if that's your wrist box, 1, 2, 3, 4, 5, 6. add that to your Kata 1. This one, I think it's fair to say Luke is pretty happy with the 2-minute warning in CLF. Gap up, rolls over, crosses back through the VWAP, through the dragon, gets it as it's crossing the Bollinger Band mean. Short, second position, cover, tries long, good scratch, gets short, nice. There's a collapsing dragon that was available, which he gets 0.8, short, cover, stop and reverse, crush. Second position, perfectly placed, great exit, good short, second position, cover, good long position. There's 5. Doesn't stay wrong too long. Gets large in a measured way when he's right. And by raw just means aligned with the market. That's all. EWZ on the 1 minute. Collapsing dragon out of this. No harsh winter, but you do have a Pcr flip and you have something like a pinch happening. I mean, I would accept that one because you were on, everything was, here's the Bollinger Band mean. So when this thing is failing, everything is on the wrong side of that. And now you get a Pcr flip and it crosses. That's worth a shot. But here's your harsh winter, Pcr flip, tight wrist box, no lose plus dinner for 2, takes what's there, 1.25, pretty nice. Just like downtown. And the daily report, dashboard 1, over bullish normal, overbought long term, the pause that refreshes short term, risk off. So there's a warning from the risk Z that we're coming into a critical state. Beware. I've been pimping the long side here, but yeah. And then the Russell gave a channeling. So if we have an update tomorrow and the Russell is better, you want to pile on the Russell rather than SPY. That's what that means. Be ready for that one. While we're here, maybe we could take a look at IWM to see what a channeling looks like. I should say there's for this holiday season, there's $1,000 discount available on the TC 2000 bundle. Just saying. Where's IWM? That's what channeling looks like. This is what the last swing looked like, by the way. And if you're just using standard exit technique, there's a 1, 2, 3. There's a sniper. How many times do you want that trade? All of them? Yep. And then this is what a channeling looks like. And the idea is that thing's going to go up to test the previous RL10 high. And if it breaks north of the dragon, that's even better. So that's where you could put a second position. Something like that. And then the short side is there too. If that fails, it's coming back to the Bollinger Band main and all the way back into this cluster right here. And if that breaks, look out below, because that'll come back to here. So the short side is equally as compelling as the long side. So I'm just going to put my little stupid box right there. Visual box trading. I'm ready to play it in either direction. And this is where I add a second position on the long side. And that, oops. This is where I would add on the short side. Actually, maybe here, where it crosses below the Bollinger Band main. That would be logical. Okay. Quick frame. All right. Dow Tactical, there's just 3 dojis, lots and lots of goodies on the auto framer of things playing catch up. Some multiples of 5 DDs that are worth looking at. ETF Tactical, 4 dojis, 6 auto framers. Standard framing data for the auto framers. And the Russell is in there for a standard trade frame at 2-to-1. Using the $3 risk. That's what that little 3.10 means. But Disney and Walmart remain at the top of the stack, 9-to-1. SPY, look how tightly compressed the S&P is at the very top of the stack. Nice. The pull back into the fall is what has created the critical state. If the S&P is failing, watch for this one to go. That's what today's gains were an alert for. An inside day, so no breakouts. Home Depot, that's why XLY is doing so well, and Pfizer. Boy, it doesn't get much more tightly compressed than that after that nice run up from here. That's what makes this a critical state. Is it a strong move to the upside or a strong move to the downside? What's it going to be? Here's the other early warning. So we've had 3 days of warning that it's got to put up or shut up and get through. It's already starting to delay. So let's give it another day. Tomorrow should be fireworks. And that's everything we have. Let's be ready for tomorrow. Hey, take good care. We shall get this published and posted. Be ready for tomorrow. Good work, Luke, and good work, Ben. Keep up the great work. Long out.